Well, in recent weeks, President Trump has called on the Fed to lower interest rates for a new reason, weakening the U.S. dollar. But how do interest rates weigh on the dollar? And is that really all that matters? It's time for Yahoo You. Cheung joined us to explain foreign exchange today. Brian?
Hey, well, interest rates are already so complicated, but that makes that foreign exchange is even more complicated because interest rates factor into it. So let's take a big step back and use some countries that we just made up to illustrate this point. So we have two countries here. We have Julvania, and where Julie is the president, and the currency is the jewel. And then we have Shapiristan, where Adam is the supreme leader, and the currency that we're using is the shap. That's some attractive currency, I think, guys. But anyway, let's say that, for example, these are two closed economies. Well, it doesn't matter that they have separate currencies, right? In Julvania, they're going to use the jewel. In Shapiristan, they're going to use the shap. But what if these countries start to trade with each other? Well, that brings up a whole host of new questions, right? You have goods that are flowing between the two countries, which means that you also have currencies. And in order to do that, right, if you are in Shapiristan, you're trying to buy something from Julvania, well, you'll need some jewels. So you'll need to exchange those currencies based on the amount of reserves that the country will have of the other currency. Now, the flow of reserves and the changes in those types of transactions actually determines the exchange rate. So we have a fake exchange rate here that explains the kind of flow between these two countries, and it shows the jewel to the shap. So right now, the jewel is trading at 10 to 1. Which means that currently, right now, one jewel will get you 10 shaps. So the jewel is stronger than the shap. Sorry, Adam, that's something personal, but it has something to do with the fact that you've shorted Cheung shoes stock in previous episodes of Yahoo U. So that's the reason why the jewel is a little stronger. But regardless, right now, one jewel will get you 10 shaps. Now, a stronger jewel means a number of things. So first of all, it's actually going to be cheaper if you are someone who has jewels to travel to Shapiristan, right? Because your jewel means it is valued at more. But it also means that jewel exports are going to be more expensive, right? So if you're in Shapiristan, you're trying to buy goods from Julvania, it's going to be more expensive because of the fact that the currency is stronger. So how does monetary policy factor into this? Well, it has something to do with the interest rates. So let's say, for example, the Bank of Julie in Julvania has interest rates at 2.25%. That's exactly what we are right here in the United States at the lower bound right now. But the Bank of Adam in Shapiristan has interest rates at 1.75%. Well, this is important because we talked about goods before, but it also has to do with financial flows as well. So this means that if you have money parked in a bank in Julvania, you're probably going to get more money on return, right? Because you're getting 2.25% as opposed to 1.75% if you had money in Shapiristan. So that means that more money is flowing into Julvania compared to Shapiristan. And that's because of the fact that obviously you're getting a higher return. More inflows means that the currency of that respective country is going to get stronger as there's more demand for that currency. And keep in mind, it's not just bank deposits either. It means that maybe stocks in Julvania are more attractive. Maybe bonds are more attractive in Julvania. So those flows will make that currency stronger. So let's say, for example, Julvania doesn't like the fact that its exports are getting more expensive. It needs to export more goods to keep GDP going. Well, maybe they'd be interested in lowering that interest rate. So let's say, for example, this happens. Big news. Bank of Julie lowers rates by 75 basis points to 1.5%. That is lower than what you're getting in Shapiristan, 1.75% if you recall. So that means that money is going to flow the opposite direction. People are parking money back in Shapiristan, and the jewel gets devalued. So that's what the next chart is going to show you. We are updating what the currency exchange rate is. And look at that. It is coming down from 10 by 20% to $8. That means that the jewel has effectively gotten weaker. This is what you might call currency manipulation. Now, it's interesting, though, because obviously interest rates bear on this, but there are a number of other factors that bear onto this as well. So you think about differences in inflation, right? Okay, great that you get a higher interest rate in Julvania, but maybe the jewel is actually quite unstable because prices are maybe deflationary, or maybe they're hyperinflationary. There's a number of other factors there. The second is sovereign debt. Keep in mind that it's not just equities or bank accounts. It's also the amount of debt that maybe Shapiristan holds in Julvania or vice versa. And the last is simply speculation that comes from economic growth factors. Maybe inflows are coming to Julvania and making it stronger simply because people think Julvania is going to have more economic growth than Shapiristan. But again, it's tough to say that it's just related to one single factor. The foreign exchange market is very complicated. But again, for the time being, it seems like things are much better in Julvania than they are in Shapiristan. We'll leave it at that.
I would beg to differ, and I would take up some issues with the stability. Look, we're getting all those Chinese manufacturing moving to Shapiristan, so that's one of the reasons it's good to have that lower interest rate. Thank you.
Currency war. I declare a currency war.
We'll talk after the show.